In this discussion, we will discuss the discussion question of discuss the differences between a single-step income statement and a multi-step income statement. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So here we're comparing two types of terms again. These are related terms, those terms related to an income statement. Now, if we had no clue of what these two things were, we could start off, of course, with what an income statement is. We could say, well, both of the single step and the multi-step income statement or the multiple step income statement are income statements. And income statements, we can start to define the income statement. And that, of course, is going to be the timing account. It's going to have revenues and expenses on it. It measures things over time. It needs a beginning date. It needs an ending date in order to make sense, as opposed to a point in time, as is the balance sheet account. We know that net income, the bottom line number, can be calculated as simply revenue minus expenses. So we could start our discussion with just the similarities, even if we have no idea what these two statements are, by just saying it's a single statement. It's an income statement. Then we can get into the differences between the two, and we can say, well, one has multiple steps and one has a single step. Clearly a difference, which we can get just from the terminology here. Then we can get into, of course, what are going to be the main steps. We can talk about some of the main steps that are going to be the difference. Now, the single step is going to be just the most simplified type of income statement, meaning we're just basically breaking it down to the net income equation. We're only going to have two components. All revenue is going to be included in the revenue section, all expenses included in the expense section, subcategory for total revenue and total expenses, subtracting the two out, giving us net income. With the multi-step income statement, we're going to have more steps, meaning we're still going to arrive at the bottom line net income, but we're going to have some more steps, some more stops along the way. And the first thing we're going to have usually is going to have net sales calculation, not net income, but net sales, meaning we're going to break out the contra sales account. We're going to have sales minus sales returns and allowances. And that'll give us the net sales. Sales returns and allowances really just being sales that kind of didn't happen, sales that we're basically reversing. That will give us the net sales. And then we're going to have the next subcategory, which will be cost of goods sold. So we'll have the cost of goods sold, which is going to be the cost of the inventory we're selling. And the reason we have that is it's a very important relationship for merchandising companies. So then the net sales minus the cost of goods sold would give us the gross profit, which is a huge subcategory that gives us a lot more detail when we're talking about a merchandising company. And then we're going to have the operating expenses, which we could break out to selling and administrative expenses. And so we could break out to expenses related to selling, related to the selling of the goods and services, and expenses that are administrative expenses, the office expenses, including the accounting expenses. And that will typically give us the net income would be the bottom line number that we're going to have in the multiple step income statement. We could get into more detail than that. We could say that we have non-operating expenses at the bottom of this, and we could break out taxes as well as have income before taxes, and then see the tax calculation and ultimately get to the bottom line number, net income after taxes.